Hello everyone, and thank you for attending. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are not familiar with our website, Specialist Trading is your premier online source for education and trading just about any market available or imaginable, from day trading to position trading to intraday trading to also to swing trading. We teach courses in every market, from stocks to the E-mini to the Forex markets. And these are all things and methodologies and techniques which I have used in my 36 years of trading. Just to give you a little bit of background about myself, as I stated, I've been trading for 36 years. I started on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist for DLJ. So I traded through the crash and tons of different market environments, and I picked up a lot of great techniques and ways in which to enhance your trading. And this is what we do at Specialist Trading. Our goal is to teach you how to trade with the specialist edge. These are all things, once again, that I use in my personal trading and then I share with the members of my site. Now today we're going to talk about new and simple ways to use candlesticks, because we know that a lot of traders love to use candlesticks, and in our opinion they are a great tool for helping you to get in sync with the market. But we're going to show you an advanced tool today, once again usually reserved for the members of Specialist Trading, and we're going to share that with you, and also to remind you that this is part one of a two-part series. Look for your scheduling for emails when we will be presenting the next presentation, but in today's presentation we will be going over one specific pattern that I want to share with you, and in the next presentation we will also be sharing another advanced candlestick pattern. And I really encourage you to attend these, because we are going to be sharing with you this information that, once again, is usually reserved just for the members of Specialist Trading. But these are things that you can probably start using as early as tomorrow, once you figure out and learn how to notice where these candlestick patterns are. Now, before we begin today's presentation, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these new and simple ways to use candlesticks, but please remember that we can in no way guarantee that any of these results will be repeated in the end. So we're required to show you this before we begin. So as you're taking a moment to view our disclaimer, I'd also like to mention that for those of you who have not attended my presentations in the past, I love to answer each and every one of your questions, but I like to wait till the very end. So if you happen to have a question, please write it down or try to remember what the question is, and then I promise we'll reserve the last 15 or so minutes at the very end of this presentation to answer any question you may have. Now, if you happen to come up with a question once we've concluded, please do not worry. I'll give you a phone number as well as an email address where you can contact us and ask us any questions about Specialist Trading or anything I went over today. All right, now, as I stated, I was a trader on the floor of the stock exchange. I know a lot of people think that that gives you a license to steal, or if you're a specialist on the floor, you just have a license to make millions of dollars hand over fist, but that's not true. In fact, my first year I struggled tremendously, and as I stated at the beginning of this presentation, our goal is to teach you how to trade with the specialist edge. But what exactly is that? Well, the specialist edge are the things that were taught to me that finally turned my way of trading around, and that's really based in simplicity. So we try to keep things as simple as possible. We don't offer trading rooms or chat rooms. We're not concerned with a lot of useless indicators or useless noise of listening to too much news, things like that. We really just learn how to focus on the chart that's in front of us and keep things as simple as possible. Now, we have, as we stated, tons of strategies for the different markets, and most of our strategies have 5 rules or less. So everything is kept to a minimum because we're just trying to get in sync with the market and then basically jump on board. So remember, once again, I teach you everything that I personally trade myself and that I've learned from my mentors in the past. So my goal as an educational company is to teach you how to trade with a specialist edge. Now, even though Specialist Trading provides signals, and we have signal alerts for our members that have purchased our strategies, we really are an educational company. Our goal is to have you be able to spot these after the first 2 or 3 months as a member, so that ultimately you won't have to rely on our signal alerts. You'll be able to just really see them for yourself. So remember, we're an educational company. Our goal is to teach you how to trade with the specialist edge. Now, since we're an educational company, here's what you're going to learn today. I'm going to give you our number 1 edge. That is a +1 pattern. Okay, that's the candlestick pattern that we have a variation off of. And so we're going to give you the rules in entirety and show you how to spot this. And then we're going to show you a lot of examples so that you'll be able to really familiarize yourself with this particular pattern. and you'll be able to spot it on your own, hopefully as early as tomorrow. All right, so let's begin. But before we begin, remember this +1 pattern is based off of your standard engulfing bar pattern, which is 2-bar pattern that we see with the candlestick pattern. So let's review that for some of you who are not familiar exactly with what an engulfing pattern is. And please remember, for those of you who may have come in a little bit late, I'm not going to take any questions until the very end. So don't even bother asking, because I won't even open up the question box to see what they are. So let's start by reviewing what engulfing patterns are. Now this is your standard bullish engulfing pattern. All right, this is a bullish sign, and what this is a 2-bar pattern. You see bar number 1 and bar number 2, and it doesn't really matter whether this is a daily bar, a weekly bar, or a 5-minute bar. You'll see this pattern just about in any market time frame in any direction. So what we're looking for, since this is a bullish pattern, we're looking for the 2 bars here. Now the first bar must close down, as you see by the dark body here. This means that we opened up at this level and closed lower. So since we closed lower than the opening, the range of the body, meaning from open to close, is dark. Now, the second bar in this 2-bar pattern is light. Why? Because we closed higher than the open. All right, so this is called your open body or light body, since we closed higher than the open. Now, what we want to see in this 2-bar pattern is that the second bar totally engulfed the range of the first bar. But when we say engulf, what we mean is we only want to engulf the range from open to close. We're not concerned with engulfing the range from the entire top of the range to the entire bottom of the range. As you can see here by these dashed blue lines, we're only concerned that this body from open to close engulfed this body from open to close. Okay? So that's your standard bullish engulfing pattern. This is what we look for when we're talking about engulfing patterns. Now when we see a pattern like this, remember, regardless of what time frame, this is a very bullish pattern because it has an edge, to the upside. There's a strong likelihood when you see an engulfing pattern such as this that the next 3 to 5 bars, whether they're daily bars, monthly bars, or 5-minute bars, will continue to the upside. So that's a great edge to have just off of this pattern. Now, if we look at the flip side of this pattern, it's a bearish engulfing pattern, and it uses the same concept but in the opposite direction. In other words, it's a 2-bar pattern. Once again, the first bar, regardless of time frame, has an up day or an open body, meaning that opened and then closed higher. So it's a clear body or white body. There's nothing inside of the open to close range. But then the second day is a dark body. In other words, it closes lower than where it opened, so the dark range totally engulfed the light range from the previous day. Once again, when we say this engulfed, we don't mean that we engulfed the range from top to bottom. We're only concerned in the open to close range, engulfing the open to close range of the previous day. Okay? Now, if you see this type of pattern, regardless of what time frame, this is looked at as bearish because there's an edge here that you will continue in the downward movement for the next 3 to 5 bars. Okay? So these are great edges. These are the standard bullish and bearish engulfing patterns that one usually looks at and trades. It's a very popular pattern that can be used just about in any market. Now, once again, the reason why this is a great pattern is because there's a high probability that the trend will continue in the direction of the engulfing bar. That's the second bar in the pattern for the next 2 to 5 bars. So let me show you an example here. As we see, just looking at this, we have 3 bars here. But what do we have? We have a bullish engulfing pattern. So as we see, the very next 3 bars are moving to the upside. Now, we specifically don't care what the time frame is or how many points we're making. It doesn't matter. We're really concerned with the concept now so that you understand how this works. But as we go higher for 3 bars, what do we encounter? We encounter now a bearish engulfing pattern where the second bar totally engulfs the up day of the previous bar. So now what happens? We have 2 bars to the downside. Okay? As we come down lower, we have 2 consecutive bullish engulfing pattern days. Okay? We totally engulf this prior bar, and then we totally engulf this prior bar. So that should be some type of movement to the upside, which it is. Okay? And then ultimately, we see we have a nice move to the upside. Now, that's your standard engulfing pattern. How can we kind of kick up these results a little bit higher? How can we increase our edge or increase our probabilities for success? Well, by using what I'm going to be teaching you today, that's the engulfing pattern +1. Okay, so in order to use this, you must fully understand what we just went over how an engulfing pattern works, and then we're going to edit it a little bit to make it meet our standards so we have this really nice edge. Now this is an advanced pattern, and we'll show exactly how to spot it. So let's go back once again to a bullish engulfing pattern. Remember, when we say engulfing, we are only concerned that the second bar's range from open to close, in this case a bullish engulfing pattern, engulfs the range of the body of the first day, the body meaning from open to close. We're not concerned that we engulf the range from high to low. We're only concerned that we're engulfing the body of the candle. Okay, so that's your standard bullish engulfing pattern. So what exactly is a +1? A +1 just means that we also engulf one more body. Once again, we're not concerned that we're engulfing the range from high to low. We are concerned that we're engulfing one more body. So we just did the exact same thing, +1. Now, what most of my students have difficulty with when they're applying this concept is the first thing they think, well, Steve, we see here that you engulfed a down day, so does this have to be a down day or an up day? Which kind of day should this be? Should it be a dark body or should it be an up body? Does it matter? And the answer is no, it does not matter. We're not concerned with the +1 whether it was an up day or a down day, or if it was a clear body or a dark body. It absolutely does not matter. All we're concerned about is that we totally engulfed one more range from open to close. Okay? Now here's one more thing to consider. As we see this, we've just increased the chances, the higher probability for us to go even higher using this pattern. It's a much higher degree of success, more than your standard engulfing pattern. But another thing to take into account is the more +1s you engulf, in other words, you can engulf +5 or +8, the higher your probability for a stronger move to the upside. Okay? So in this example, we're looking at a bullish engulfing pattern +1, but this could easily be a bullish engulfing pattern +3 or a bullish engulfing pattern +5, just as long as you continue to engulf other open to close bodies. Remember, if we see this pattern, there's an even stronger probability that we will be headed higher. Now, if we look at the opposite side of the coin, we just use the same concept, the same rules for a bearish engulfing pattern. What we have here is a standard bearish engulfing pattern, and now we have +1. So we've not only engulfed the previous day's open to close range, but we've engulfed one more open to close range, regardless if it was up or down. As you can see, we're not concerned whether we engulfed the high of the bar or the low, only concerned with the open to close range. If we spot this, there's a high probability, even higher, that we are going more towards a downtrend with this particular pattern. Remember, if you see a bearish engulfing pattern +3 or +5 or even +8, the chances are you're going to be going down even more. So this is a great edge to have in your back pocket. So now you get a real good idea of what the direction may be. Let's say you're long a stock or long a future and you see this pattern. This does not automatically mean to sell. It means that you may want to be careful because we may be having a trend change. So what you want to do possibly is maybe sell a portion of your position. Possibly you want to move your stop up. Or if you're an aggressive trader and you really trust this technique, you may want to say, you know what, I'm going to get out of my position entirely. Now say it's the opposite. Say you see a bullish engulfing pattern +3. And let's say you happen to be short. Okay? Well, you may want to cover your position right off the bat if you're an aggressive trader. Or you may want to just simply move your stop so that you can lock in some gains, or maybe you want to sell a portion of your position. So lots of ways to use this tool, but let me show you some examples of how this really worked with all of the different markets and in different time frames. All right, so let's look at some examples once again of engulfing patterns +1. Let's first start off with stocks for you stock traders out there. We look at TSO right here, and we can see it looks like we're in some type of ranging move, but once you've spotted this technique, you see that we have a bullish engulfing pattern +1. So what is this telling you? It's saying that most likely we're going to get a nice strong upward move. Okay, and as you can see, in the next few weeks, TSO went up 5 points, all because you had that really nice clue that you were most likely headed higher. Now you went higher, and at this point, someone would say, boy, this is great. I'm going to buy some more TSO because I got long off of some signal maybe down here or so. Well, guess what? bearish engulfing pattern plus 1. All right. So at this point, you may have wanted, if you were long, this is where you may want to sell some of your position, or you may possibly say, I think maybe I'll move my stop up because look what happened. You know, the market fell out of bed about a good 2 or 3 points in the next couple of days. So these are great directional tools. All right. They're great for not just simply to buy and sell when you see these. These are not strategies, but they're tremendous directional tools. You see how they have much more power than simply your standard engulfing patterns. Let's look at the QQQs. This is an older chart, but we see here that we've kind of going sideways. We've had a nice run up here the last few days, but what do we have? We have a bearish engulfing pattern plus 2, okay? We engulfed the previous bar plus another one plus another one. So this is a bearish engulfing pattern plus 2. So this means we're probably going to have a stronger move to the downside than most likely we would see. And in the following weeks, we were down roughly about 5 points in the QQQs. How about if you're intraday trading? Well, here's a 15-minute chart of Apple. Okay, as you can see, Apple has been slowly headed down in this intraday chart, roughly going down about 10 points. But what do we find here at this point? On a 15-minute level, we have a bullish engulfing pattern plus 1, 2, 3, 4. Remember, the more bars you engulf, the higher your probabilities that you're going to have a move in that direction of your engulfing bar. So we engulfed the standard engulfing pattern plus 1, 2, 3, 4. So this should tell you that if you were long Apple, to stay long most likely, or if you were thinking about getting long, to start looking for some structure for entries using different strategies, because in the next couple of hours, Apple went up 12 points. All right, so let's look at how this transfers over into the E-mini market. When we're talking about the E-mini market, we're most likely looking at intraday trading, and you're going to see a lot of these different signals when you intraday trade the E-mini on tick charts, okay? Because the tick charts have a way of really giving you a lot of information because of the volatility, because of the way those charts are constructed. So as we see here, we have a perfect bullish engulfing pattern plus 1, 2, 3, 4, 5, 6, 7, 8. And you can see these dojis count as one, even though they may have opened and closed at the same price, they are still being engulfed. So this is a bullish engulfing pattern plus 8, calling for a rather strong move in the E-mini to the upside. And as you can see, in the next hour or so, the E-mini had a really nice rally of 8 points. Now, all along the way, someone could have said, well, where do I get out, or how do I know to stay in? What if I think it's going to roll over? Well, the entire way up, you had a series of bullish engulfing patterns, plus 1 and plus 2. So this the whole time the E-mini was rallying, it was confirming that we're most likely going higher. Now, if you look at a daily chart of the E-mini, you'll see the same type of setup. So it doesn't matter whether we're intraday trading or looking at position trades. We see here that the E-mini went sideways to lower. Someone at this time could have thought, well, we've hit some support. This looks like a good place to buy the E-mini. Actually, if you knew this one rule, you would say, not really. We have a bearish engulfing pattern plus 1, 2, 3, 4, 5. Okay, so right now, the E-mini, not some trading guru or some chat room or some support and resistance line or some educational news that we're getting on the TV, but the most important thing, the E-mini is telling us it's going lower. And as we can see here, we've bracketed off a total of 8 bars plus 1 that we should be giving us a very strong signal. And the E-mini continued down 60 points after that in the following week or so. Okay? So do you see how we state that it's the simplest things that really hold the most potential for making profits? Too many people rely on news, rely on too many indicators, rely on some trading guru to tell them what to do. If you learn how to listen to the market, which we're teaching you right here in today's lesson, you'll be able to figure these things out for yourself. You'll save a lot of money and a lot of time. Remember, keep things as simple as possible. This is what my mentors taught me, and this is what we try to teach all of our students at Specialist Trading. Now, for those of you who are Forex traders, you'll see that this same exact concept works in the Forex markets as well. Now, the Forex markets, in my opinion, are the best trending markets available. So you'll see how this works even better in the Forex markets, because once you get hold of a really nice trend, these markets will continue in that direction for not only for weeks, but even for months. Let's look at a daily chart of the Australian dollar. Now it had been heading slightly lower at this point, but what do we have? We have a bullish engulfing pattern plus 1. So at this point, the market, the Australian dollar, is telling you most likely we're going to have a strong move to the upside. And 900 pips later, we did. So you can see how strong that was. What a nice move that would have made. And you could have used this nice rally to look for any type of structure or for some type of entry signals along the way. Now we see here we have a daily chart of the euro dollar, and the euro dollar is heading lower. And right at the very top, what did we have? We had a bearish engulfing pattern plus 2, signaling this downward move of roughly 300 pips or $3,000. So at this point, someone could have said, well, I've made a nice $3,000 trading one lot. I think I'll just cash in my chips and maybe I'll just say thank you and leave. Well, actually, that wouldn't have been the best thing to do, because what do we have here? The market is telling you that most likely we are headed lower. We have a bearish engulfing pattern plus 2 plus another bearish engulfing pattern plus 1. So remember, what do we listen to? We listen only to the market. Rather than listen to some trading guru tell us that, well, we've hit some support, most likely we're going to have a bounce, or waiting for economic indicators to come out. The market was telling us in the euro dollar that we're probably going to be headed lower. And we went down another 1,000 pips, or roughly $10,000. So do you see how if you learn to listen to the market, it'll tell you exactly what you should be doing? How about a weekly chart? Now, so far we've looked at daily and intraday charts. How about weekly charts? Well, here we have kind of a sideways range in the dollar-yen. Most people would say, well, nothing's happening. I'm going to sit on the sidelines. I'm not going to do anything in the dollar-yen. Well, if you're a seasoned pro and you know this technique, you would see here that the dollar-yen is actually telling you it's most likely going to go higher. Why? Because we have a bullish engulfing pattern plus 3. 1, 2, 3. Remember, the more bars that you engulf, the higher the probabilities that you'll have a strong move. So we have a bullish engulfing pattern plus 3 in a weekly chart. And as we can see here, we went up another 800 pips, or roughly about $80,000 per contract. Now, a weekly chart in the Canadian dollar also gave us some great moves. We see a bearish engulfing pattern plus 1, and we have 1,000 pips to the downside. Then we have another bearish engulfing pattern plus 1 and another 700 pips to the downside. So once again, if you are a Forex trader, you see how well this technique works. It even works better in these markets, in my opinion, because they trend tremendously. Now I show you a monthly chart. So far we've looked at weekly, daily, and intraday bars. Let's look at a monthly chart. This is an Australian dollar chart, a monthly chart. And looking back in hindsight, someone could have said, boy, look at this nice big up move we had in the Australian dollar. It really would have been nice to take advantage of that. What if I could have known in advance that the Australian dollar was going to have a big move like that? That would have really saved me a lot, and I could have really made a lot of money going long. Well, if we simply use the tool that we talked about today, we see here at the very beginning of this run, we had a bullish engulfing pattern plus 1. Okay, telling us it's going to be a strong move. Now, all the way along in this upward move, we had another bullish engulfing pattern plus 1 telling us it's going higher, plus another bullish engulfing pattern plus 1 confirming we're moving higher. But then when we got to this point, at the very top, someone could have said, well, I guess we're going higher. We continue to move higher and higher. There's no end to this yet. But what was the market telling us? The market was telling us most likely we're going to have a trend change. Remember, this is just a trend indicator. This is not a strategy. So the market was not telling you to go short. It was not telling you to exit your long position. It was just simply giving you a warning that if we start to change trend and go to the downside, you may want to protect yourself, or you may want to exit and start to look for ways to go short the Australian dollar. You see what a great tool this is. And if we follow along, we see that we immediately drop down 3,000 pips roughly in about 3 or 4 months, just from that small signal of the bearish engulfing pattern plus 1. Now I want to show you something that's rather current in the last 3 months. A lot of people have been talking about, boy, the market just keeps going up. Yesterday we fell out of bed and a lot of traders were saying, that's it. We hit a top. There's no way we're going to go higher and higher. Well, maybe we did. We don't know yet, but at the same time, it's not about trying to predict what's going to happen. It's listening to the market for signals. Now, if we look at the spiders, which is the ETF on the S&P 500 index, we see here that at the very beginning of this year, just about 4 or 5 months ago, we see here that nothing much was happening. We were kind of going higher to sideways until the beginning, the first week of January. What did we have? We had a bullish engulfing pattern plus 1, 2, 3, 4. Remember, the more bars you engulf on top of your bullish engulfing pattern, the higher the probability that you're going to be headed in the direction of the engulfing bar, which is your last bar right here. So a lot of people could have said, well, I don't believe it. There's too much going on with the news, with the economic news. I mean, we could be going off the fiscal cliff. Who knows what's going to happen throughout the world with what's going on with North Korea? Who knows what's going to happen in Europe with all the defaulting going on over there? It's just not very good. And plus, the guys I subscribe to say there's tremendous resistance here, or all my trading gurus are saying there's no way I should be thinking about going long anything in the market. I think I'll either short or be on the sidelines. Well, if you want to listen to outside sources, this is why we feel most traders lose, because you're listening to the wrong thing. If you listen to the most important thing, which in this case was the market, the spiders, which are a representation of the S&P 500, it was telling you we're going higher. Better get on board because we're most likely going to have a strong upward move. And as you've seen in the last few months, we've had a tremendous move. Now we had a bullish engulfing pattern plus 4, and then we've gone up 14 points in the spiders, which roughly equals about 14 or 1,500 points in the Dow. So this was a tremendous indication in the spiders telling us that we're going higher. You could have seen this in the Dow as well. You could have seen this probably in the E-mini futures and in other stocks that really mirror the Dow. So it just wasn't in this ETF alone, but you can see how strong it is and how well it works. Now, points to remember, extremely, extremely important, because this is the problem that most of my students have. They think that these are techniques for entry and for trading, and they are not. These are not strategies. In order to have a complete strategy, you have to have other filters, such as the 50-period simple moving average. You also have to have other things such as stop placement. You have to have an exit technique. You have to have some type of money management, knowing exactly where you're going to, how many lots or how many shares or contracts to trade. We haven't talked about any of those things. This is not a strategy. Therefore, it's not a strategy at all. It's simply a momentum tool or a directional tool. We're just using this to give us some type of idea that we may have a quick trend change. Okay? So remember, please do not, your eyes will light up when you see these things. Probably at the end of this presentation, when you spot some, you'll start to think, boy, I could have bought here and sold here. But please remember, these are not complete strategies. They are just momentum or directional tools. All right? Now, engulfing patterns +1 are very prevalent. So you're going to see a lot of them. You'll see a lot of them in the Forex markets. You'll see a lot of them in intraday trading of stocks and of the E-mini or the futures markets. Okay? But you can apply them to any time frame in any direction. So I'm sure by now you know how to spot them. Remember, it's just your standard bullish engulfing pattern or your standard bearish engulfing pattern plus 1 to 10 or 1 to 20. So in other words, you want to engulf more open to closed bodies on top of that, and you'll have a higher probability for success. But if I can leave you with one last thing, these are not complete strategies. So please, I do not want to get any questions right now when we go to the questions and answers. Well, Steve, where do I enter? Or Steve, where do I place my stop? Because remember, those questions are only asked for a strategy. Strategies have entry points. Strategies have stop placements. But directional tools and momentum tools do not. They're simply patterns to give you a great insight or a great edge as to the short-term direction of the market. Now, I know a lot of students will say, well, Steve, I just started trading. I don't have strategies. I don't know how to find a strategy. Well, remember, this is best used once you find the direction and you start to see that it's going in that direction of the bullish engulfing pattern, let's say +4, you're going to need to apply a strategy so that you can trade in that direction. And this is what we provide at Specialist Trading. If I can take a few minutes here to talk about probably one of our best courses. This is strategy number 4. Now, this is probably one of our best strategies because it transfers well on into any market. As you see here, we have strategy 4 for the E-mini markets, for the stock market, as well as for the Forex markets. It's a great, great strategy. You see a lot of signals. You can trade it intraday or you can trade it on monthly time frame. It doesn't really matter. Now, if you wanted to purchase all 3 of these courses, they're discounted to $14.85. But you can also purchase them individually because you're all attendees to this presentation will break up the combo, and you can purchase them individually if you like for the particular market that you trade for only $4.95. That's a great, great price, because let me show you some of these actual signals that were generated using strategy number 4. These are signals in Facebook that happened in the last 2 or 3 months. As you can see here, we had 2 buy signals and 2 sell signals, all using the strategy number 4 for the stock market. These are based off daily signals. Now we also have it, and as you can see here on the stock EW, you can see with the great 4 signals we had to go short, and someone tracking this and someone who is a little more aggressive than your standard trader would have held on to these positions, and it would have paid off, because you can see how EW did in the last couple of weeks, dropping from 82 all the way down to 64. I think it's still headed lower after this chart was made up. Now, we didn't have any news that the earnings were going to be terrible. No one contacted us the night before, but strategy number 4 pinpointed and calculated that it was a short rather than a long position trade. We also have strategy number 4 signals for the E-mini. Going back roughly about a month in April, we see here that on this 5-minute chart, we just were inundated with a ton of buy signals. All would have been profitable had you used strategy number 4 intraday. And you can also use it to the downside as well. This was just a few weeks ago on a 5-minute chart as well, going short the E-mini. And then lastly, we have signals for the Forex markets. We have strategy number 4 Forex signals. We would have gone long the Canadian dollar in the middle of February, and a really nice move to the upside. So as you can see, strategy number 4 is a great strategy if you're going to be using the tool I gave you today, the bearish or bullish engulfing pattern +1. Remember, those are just directional tools. They're telling you in advance, most likely, a high probability of direction. But once you have that direction in place, you need a strategy, or you need some type of structure to actually enter. You need rules and some type of strategy to tell you where to enter, where to place your stop, and where to exit. So this is what we provide with all of our strategy number 4 courses. You get instant online access, detailed instruction. We tell you exactly where to place your entries, exits, and stops. You can trade it either conservatively or aggressively. We teach you how to do that. This comes with 1 year of trade signal alerts. You also get 1 year of weekly trading lessons. These are videos I provide for all of my members. And you get my personal email address. You have access to myself whenever you like. You can ask me a question, or you can just email me, and I'll respond as soon as possible. Remember, if you want to pick up all 3, we've discounted these tremendously to $14.85, so you can cover all the bases in all of these markets. But if you're interested in purchasing them individually, let's say you only trade the E-mini market, you can purchase each one individually for $4.95. But this is for a limited time only, just for the members today that attended today's presentation. Now, for more information, you can go to our sister site, which is protraderstrategies.com, where you can actually purchase online the combo we just talked about. Or if you're interested in just getting some information, you can contact Don Jans. He's our senior trade representative. You can contact him at donjans@protraderstrategies.com, or you can call him directly at area code 310-492-5393. He can answer any question that you may have, or he can take an order for you over the phone. Now, as I promised, we are at the portion where we can ask any question you like. I want to thank you for waiting. I'm sure a lot of you were busy writing things down or trying to remember questions you may have had. I hope I answered them during the course of the presentation. But please remember, in closing here, probably the most questions I get concerning these candlestick patterns are, well, Steve, where do I enter or where do I exit? Remember, those questions are for strategies or for systems. This is not a strategy or a system. It's simply a great directional tool. Okay, so once you find the direction, then you simply know that you have to apply some type of structure to it. So it's a great technique for finding the direction. Chung Ho asks, Steve, do you use any indicator like the 50-period moving average? No, we don't really use that with this, because once again, this is a trend directional indicator in itself. So we really just look to spot to see that we've had the bullish or the bearish engulfing pattern, +1 or +5, whatever, and then we look to apply a strategy that fits what's currently going on in the market. Okay, so for this particular method, we don't really need to incorporate a 50-period simple moving average at all. Okay. Any other questions? And remember, once again, the great discount that we have for all of our attendees today is only going to last for a couple of days. Strategy number 4 is probably by far our most popular, and I would say our premier strategy for trading all of the markets because it transfers so well, whether you're intraday trading, whether you're position trading, or whether you're trading the Forex or the stock markets. It's a great, great strategy. I use it myself. In fact, I was using it today to trade the E-mini today. So you get some really, really nice signals. Okay. Also, once again, let me just reiterate here, if you happen to have any questions, I see there's not a lot of questions, so I must have answered everything in the presentation. But remember, don't worry, if you happen to come up with a question or you want to purchase, take advantage of the special offer that we have today, or you have questions concerning that, contact Don Jans. He's our senior trade representative. You can contact him at donjans@protraderstrategies.com, or if you'd like to speak to us, you can simply call us at area code 310-492-5393, and we can answer each and every question you have. But in closing, since there are no further questions, please remember that if you want to take advantage of this great strategy, you have to do so probably within the next day or so. Now, if you're still interested in learning more about advanced candlestick patterns, we have recorded this presentation, so you can email us or call us up and you can request a recording of this just so you can study it a little bit better. Remember, I don't want anyone jumping in to this thinking that this is a strategy. This is simply a great directional tool technique. Okay, so simply call us at the number provided or email Don Jans and he will supply you with the link to the recording. All right, well, in closing, I want to thank you all for attending today. Remember, this is our advanced candlestick presentation. We will be giving you another one in the future with another technique. Be sure and look for your email alerts telling you about when our next presentation will be. But thank you so much for attending, and I look forward to all of you purchasing strategy number 4 and becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.